Hello everyone again. Yes, I'm going to talk to you about final pay controls, which is the final topic of this morning's seminar. So NHS final pay controls. Final pay controls were introduced back in 2014 to help prevent manipulation in the NHS pension system for employers giving employees a large pay rise in excess of the allowable amounts in their final 3 years in the pension scheme. This then leads to a larger pension in retirement for the individual member. So it can be a significant problem for GP practices as NHS employers, as it is the practice who is liable to pay the charge if they have staff in breach of the allowable amounts. So looking at some data from NHS Business Services authorities, on their website, you can see the number of completed, investigated and completed breaches over the past few years. So starting in 2014-15, there were only 6 completed, investigated and completed breaches. 2015, there were only 3. Fast forward to 2018-19, there were over 600 cases completed. 1920, there were 931 completed cases. So this is becoming a bit more of an issue for NHS employers and GP practices. The average charge for all these cases which were completed was approximately £35,000 each. NHS Pensions is responsible for identifying and informing the employer of a potential breach, and they will calculate the charge and issue the invoice to the practice to pay if there is a charge. So who does it affect? It can affect all officer scheme members or practice staff who have benefits in the 1995 pension scheme. It does affect members who have since transitioned to the 2015 scheme, as long as they have 1995 benefits. It can also affect members of the 1995 scheme who then transfer out their benefits to another pension scheme. So it can affect all staff members who have an increase in pay of more than the allowable amounts in any of the final 3 years of pensionable service who have 1995 scheme benefits. The charge can therefore apply to non-GP partners, such as practice managers and nurses, where their partnership profit share can fluctuate each year. So who doesn't it affect? It doesn't affect members who are solely part of the 2008 or 2015 pension schemes, or GP partners whose pension solely relates to the practitioner part of the pension scheme. This means that if their pensional pay solely relates to their GP partnership and not to any outside appointment income, which could be treated as an officer post. So the allowable amounts, although generally taken as 4.5% plus the annual increase in inflation to February preceding the relevant year, it's actually the lower of the 3 possibilities that you can see on the slide. So the lower of the member's pensional pay in the relevant year, or the inflation plus 4.5%, or the increase in the member's pay for the current year compared to the previous year. And this needs to be analysed and calculated for each of the 3 years up until the date of retirement from the pension scheme. The charge is calculated, and the excess pension benefit is calculated from taking the excess pensional pay over the allowable amount. So we get the excess pensional pay over the allowable amount, multiply this by the member's membership in the pension scheme to give you the excess pension benefit. This is then multiplied by the scheme actuary pension factor to give the actual pension charge, which can run into thousands of pounds. The calculations are complex. If we look at a very simple example, we've got a member with final pensional pay of £30,000. They're given a 10% pay rise in their final year. So the actual pay rise is £3,000. If the allowable amount is 4.5% plus CPI, so say for this example, that's 2%. So the allowable amount is 6.5%. The actual pay rise of £3,000 is just over £1,000 more than the allowable 6.5% rise. The excess pay is multiplied by the scheme's individual scheme membership to give the excess lump sum and annual pension benefit. This is then multiplied by the scheme actuary factor to give the charge. For this example, a 60-year-old with 30 years service, the charge to the employer would be over £9,000. So other points to note, where there's an increase in pay for a genuine change in employer, this is disregarded from the calculations. So if you move jobs and receive an increase in pay, this is disregarded from the calculations. The charges do apply though, where a staff member is paid more for being promoted internally within their same employer. So that does actually, the charges do actually apply in this instance at the moment. If you have multiple employers in the final 3 years, then there could possibly be charges for each employer. There's an exemption if the final pay control charges arise due to the national minimum wage. But looking forward, we have final pay control reforms. So as part of the wider NHS pension reforms published at the end of January, there are the following possible changes. The two main ones to the final pension pay controls, the two most important ones, are firstly, increasing the allowable amount to 7% plus CPI. The government's analysis on this would mean that about 50% of the people would be taken out of potential charges by increasing the allowable amount from 4.5% to 7% plus CPI. And then the other proposal is to include further exemptions from the regulations. So to exempt final pay control charges for genuine promotions, for national agreed pay contracts, increases in pay where summary sacrifice schemes cease, and for non-GP partners, the exemption would apply if their partnership share of the profits did not increase. What this means is that if you had a 6-session partner and they remained on that number of sessions, the exemption would apply even if their profit share increased. It would also apply, the exemption would also apply is if their profit share increased, but that was only due to a reduction in the overall number of partner profit shares. And so there were less partner sessions, and so the profit share from that individual increased because of that. So going forward, the proposal would be that it would only affect non-GP partners if there was an increase in profits, if they stayed on the same, if they increased their number of sessions. It's proposed that these changes will come into effect and be backdated from the 1st of April 2021. And the consultation closed on the 8th of April, but we haven't heard any latest guidance on this as yet.